mortgage Lambo question. I think if you, obviously I know it's a joke, right? But obviously don't have that outlook, that mindset. Like you're not going to be buying Lambos or paying off your mortgage in your first year or even two of trading, more than likely, unless you have a good amount to trade with and you're being really aggressive. Or you have a lot to trade with and you're being conservative. I guess you can kind of look at it either way. But in general, just having a longer term perspective, knowing that you're going to go months without making money, like that's part of trading. If you want to do trading full time, if you really want this to be a full time thing, you definitely have to, at a minimum, have like 6 to 12 months of capital saved up to cover all of your expenses, like all of your life expenses. Everything that you obviously need to be able to pay for, you have to be able to pay for. You have to have a cushion of at least 6 to 12 months is what I always say if you want to trade full time. And then when it comes to actually trading, you're not going to make money. Like in my case, I've gone 2-3 months without making any money. And you, for that reason, have to have a cushion built up, right? And you have to understand that this is not a consistent way to make money at the end of the day. It's not. No matter how you trade, you're not going to make money every month. Like, I don't know any trader that makes money every single month, 12 months out of the year. Maybe you'll make money 10 months out of the year and you'll lose 2. It might be 2 in a row, or it might be 2 spread out over the course of the year. Typically, a big amount of your profits are going to be distributed within 2 to 3 months of the year. You'll have a couple losing months, and then the rest of the year is kind of spent just trying to preserve that capital, maybe making a little like ground forward. You'll be making a little money. It won't be anything crazy. And so based off the way you trade, there's going to be inconsistency, right? In whatever way you trade, whatever system. And again, it kind of just depends on how that's distributed and where your losing months are, if your losing months are back to back or in a row. But I have to know, like I'm prepared. Oh, I could go 2-3 months without making money. And then for 2 or 3 months, I'm going to make the majority of my profit for the year, which I'm then going to pay myself. And then finding a way based off your strategy to go about paying yourself. And I think doing it bi-weekly is really tough. Doing it monthly is probably the best case, or doing it quarterly, right? And if you think about it from that perspective, I mean, the way you should be treating it, if you were to go invest your capital in like a hedge fund, for example, you're not going to be pulling your money. Obviously, that's a longer term investment, so that's a little different. But you shouldn't need the money you're trading with for at least 3 to 6 months, right? You should expect to be able to keep that in the market to continue growing it, just like you would if you would have invested your capital somewhere else. And then that money would be managed by someone, or it would just be in a longer term investment, right? And then you'd be able to take that capital out when it does grow. And at times during that, say, year or 2 years or 3 months or 6 months or whatever, your capital, your account is going to fluctuate. At one point, your account might be down, and then it'll be up. It might be really down for a month or two. And then at the end of that period of time, whenever you go to withdraw, like obviously you withdraw when you're up, it just depends on where that's going to kind of fall into place. So it might not be for a couple months that you actually withdraw profit that you've made. The easiest way to look at it is when you close that period, whether it's a month or 2 or 3 months, like quarterly, every 6 months, or every 2 weeks. Again, just depending on the way you trade. You close that period of time, whatever you're up at that period of time, you're going to pay yourself. You have to have enough money in your account still then to continue trading at that same size, at those same risk levels, and trading that same, capital per position or however, again, you're going to go about managing risk, and continue to trade. And at a certain point, let's say it's the end of the period, you pay yourself, you had a great first period, whatever that amount of time would be. Let's say you just made $20K. You pay yourself that $20K for that first 3 months of trading. Now you roll into the fourth month. Now all of a sudden you're down $20K. Your account's down $20K. You've already paid yourself $20K. That money you've taken out of your account, right? You put it somewhere else. But now your account's down, and you just have to understand now we're going to continue trading. Your account might go down even more, but then at the end of that next period, hopefully it's back up to where you've made profit, and then you can withdraw and pay yourself again. Maybe it's not. Maybe you have to continue trading and you're just like, shoot, I can't pay myself this period. I'm not going to be able to pay myself because, I didn't perform. My system didn't perform. I'm not going to get a paycheck this period because whatever of X, Y, and Z. But you continue trading. You, again, have enough capital in your account to continue trading, continue risking the same amount of size you were in the first or the prior period, right? So you're not drawing down too much onto your account or into your account, drawing too much down to where after you pay yourself, then you take a loss and now you don't have enough to trade with. So you need a cushion to trade with. You need to then make enough to pay yourself. And I think obviously it's easier. The more money you have in your account, it's a little bit easier to trade, just inevitably, like because you're gonna be able to trade bigger size. Your actual trade size, like per position, is not going to have as much of an effect on your account. Like your account's not going to be going up and down 20, 30% every week. So you have to have this to go back to where I kind of started. You have to go back to that perspective of one, like think about how challenging it is for these hedge funds, these institutions to outperform just the S&P 500. Right? The average hedge fund cannot and does not, on average, right, outperform the S&P 500. The average hedge fund's growth yearly is 5%. The S&P is 10. So, these hedge funds with billions under management are struggling to outperform the market. Now, it's different because for us, we're retail traders, right? We can add these variables into our trading that and trade with smaller size, right? And even trading with $500,000 or a couple million is smaller size compared to billions of dollars. It's easier for us to make money, arguably, because we're just doing it for ourselves, right? We're not doing it at this crazy scale for thousands of people and billions of capital. So we're able to do better. And here's an example. I have like a friend that started trading and he had a phenomenal first quarter of this year. He did really well. He made like 250% on his account. And I'm like, well, if you could repeat that and you could then have the same, you could figure out what all the variables were, exactly what happened, exactly what decisions you made when you made them, and you could build out a blueprint and a map, and you could give those same like results to someone else. And someone else could have come in and they could have had the same exact results as you that first quarter of the year. You would be like very, very rich. And that's what hedge funds have to do. They have to provide the same results to everyone. Us retail guys, we could come in, we could trade however we want. We can have really great quarters. We don't have to worry about building some like system, removing all the variables to where that is repeatable, okay, for someone else. Now, what I've done, because I'm trying to do this on like a smaller scale, I'm trying to help hundreds of traders in this group. I've kind of approached things like I would a hedge fund, but more aggressive. We're trading options, but I have built a system that I've tried to remove as many variables from, right, to make those results as repeatable as possible so I can have success and then everyone else that's following me can have success. So the way I approach things, it's a more conservative approach to day trading, arguably, right? It is that because I've removed most of the variables so that others can have success with me. If I was just doing this on my own, I'm sure I would be trading in an entirely different way if I was just trading my own capital, because I have to make sure what I do is repeatable. And then at the end of the day, like I want to make sure everyone can make money and pay themselves. And it might be not for a month or two, but at the end of the year, I want to make sure that all my guys, all my traders, I've been doing this for over 4 years, right? Sharing all my trades, posting all my trades, doing the call outs. And I want to make sure that this group is successful. And there's been periods over the last 4+ years that, people haven't been, but in the long run, in the long term, everyone is. And so just, coming into things with that expectation and understanding that you have to be able to go a couple months without paying yourself, then you have to pay yourself. You have to have enough in your account to then sustain any drawdown that you might, kind of encounter along that period to then get to the next pay period. Hopefully you performed, you can pay yourself at the end of that time. Again, the way I trade is more systematic. It's more geared toward outperforming the market 3, 4, 5 times over. but it's not a super aggressive approach where you're going to be making a Lambo the next month. And the only case where you're making a Lambo in a month from now is where you're coming in and you are just putting your whole account on the line. Like I could make a Lambo next month if I put my whole account on the line. And then what are the probability, or what is the probability? What are the odds that I would blow up my account? They're probably very high, right? And then you have to be able to do that again and again and again, refund your account. And so I just don't want anyone in that position, right? So, I mean, ideally you have 5, 10,000 minimum to trade with, and you're able to continue trading and focus on that longer term perspective of just growing your capital, and just knowing that really anywhere else you'd put that capital, no one would be able to grow it more than you would be able to. Unless you want to, I guess it just depends. Unless you want to put your account on the line and definitely push risk, then that's up to you. But just know, like, it's all about the long-term perspective, and it's all about staying in the game. And if you can't stay in the game, if you can make 250% the first quarter, but then you give back that 250% the second quarter, but not just that, you then give back your whole account, then you're not staying in the game, right? Just some like general thoughts and perspectives. I think it's just hard to grasp a lot of this stuff. Yeah. There's definitely there's a lot of different ways you can approach trading, and some that would lead to way higher returns in a month or two than the way I'm trading right now, right? And I know that. But at the end of the year, I want to have the most systematic approach to where everyone can come in, they can make some money, and they're not going to blow up their accounts, right? That's why I'm always preaching the risk management, position size, and just trying to make sure that everyone's able to have that replicatable success, right? So it's more of a systematic approach. And systematic approaches, typically there's not going to be all these variables, and you're not going to have these massive months. So I'm trying to focus on consistency and capital preservation over the course of years, because I've been doing this for 4 years. I want to continue doing this for another 4 years, right? Plus. So anyway, that's my little talk of the day.